Hey everyone, I just reviewed the third quarter fundamentals and honestly, some of the results are shocking. I anticipated pretty strong commercial real estate momentum in the third quarter as the lockdowns had pretty much ended, new households were being formed, spending had increased, and companies were shifting their positioning towards stronger growth. But I was still surprised by some of the numbers that came in. I'll start with office, the property type facing the most uncertainty. As we entered the third quarter, the Delta variant of COVID was ramping up and companies were pushing back their timelines for staff to return to the office. Many companies were taking a wait-and-see approach and leasing activity was pretty soft. Despite this tepid outlook, about 26 million square feet of space was leased in the third quarter. That's not a huge number in the grand scheme of things, but it's on par with the quarterly pace of demand back in 2018 and 2019. Definitely not a snapback of space demand, but it was sufficient to bring the national office vacancy rate down by 10 basis points to 16.1%. So overall, the office performance in the third quarter surprised to the upside, if only by a small amount. Next, I'll focus on retail. Going into the third quarter, I think expectations for retail were positive, but I don't think they were very optimistic. The sector outperformed, filling 28 million square feet of space, the best quarterly absorption since 2017. That brings the total occupied retail square footage back above pre-COVID levels. The retail vacancy rate came down by 20 basis points, and it's almost back to where it was in the second quarter of 2020 as we were entering the pandemic. In addition, average rents continued to trend upward, rising by 2.5% on a year-over-year basis. Again, I wouldn't say the retail real estate sector is crushing it, but compared to most people's perception, retail is outperforming expectations and also surprised to the upside. Now, I'll turn my attention to the apartment market. I think everyone was expecting the third quarter to come in strong, especially considering the outsized positive results of the second quarter. But I don't think most investors were anticipating that more than 273,000 units would be filled in the quarter, a record absorption figure. So far in 2021, through 3 quarters, about 550,000 net apartment units have been filled. To put that in perspective, in our 30 years of data history, the best full year of apartment absorption was 376,000 units in the year 2000. Even though apartment developers are on pace to deliver a record 400,000 units this year, vacancy rates are still coming down. In the third quarter, the national apartment vacancy rate hit 2.8%, the lowest quarterly vacancy rate on record. In addition, rents are way up. They climbed by 6.5% on a quarter-over-quarter basis, and they're up by 11.2% compared to the third quarter last year. Again, we all thought the apartment results for last quarter would be good, but I don't think anyone was expecting an all-time low vacancy rate and double-digit annual rent growth. The final property I'll share results on is industrial. Now I have to say that expectations for industrial have been running high. E-commerce has been strong and companies have been bolstering their inventories, so investors expected solid space demand. So I'll start with the rent growth. It was up by 3% on a quarter-over-quarter basis and up by 8% on a year-over-year basis. That's pretty much in line with most forecasts. The surprising number was the amount of space absorbed in the third quarter, 157 million square feet. That brings the year-to-date through the third quarter total to 364 million square feet. Since 2000, the best full year of absorption was in 2016 when 331 million square feet was absorbed. So, third quarter space demand brought the national industrial vacancy rate down to 4.4%, a new record low. The third quarter delivered better than expected results with some record-breaking space demand numbers. This will likely add more fuel to investor optimism, especially in the office and retail sectors where expectations have been more modest. Looking forward, when you consider the economic outlook, even with the supply chain challenges, the labor shortage, and the outsized inflation numbers, things are still positive. For real estate investors, the momentum is strong and the outlook is enticing, especially when you keep your eyes on the horizon.